As 2025 draws to a close, Sweden's economy is under the microscope, with analysts, policymakers, and everyday citizens all watching closely to see how the nation is faring after a turbulent period. The past few years have tested Sweden's renowned stability, as the country navigated a series of global and domestic challenges that left a noticeable mark on its economic landscape. Emerging from a period of sluggish growth and persistent inflation, Swedish society has felt the impact in daily life, from higher prices at the grocery store to uncertainty in the job market. Many families have had to tighten their belts, while businesses have struggled to adapt to shifting consumer habits and rising costs. After grappling with global supply chain disruptions and energy price shocks, Swedish households and businesses faced squeezed budgets and high borrowing costs. The housing market cooled, and consumer confidence dipped, as people worried about the future and postponed big purchases. Now, fresh data and government action suggest a shift. Signs of recovery are appearing. Recent reports show inflation is finally easing, and there's cautious optimism in the air as policymakers roll out new measures to support growth. The Ministry of Finance and the central bank are moving from crisis management to nurturing a fragile recovery, buoyed by improving indicators and renewed confidence. Interest rates are being adjusted, and targeted investments are being made to stimulate key sectors like technology, green energy, and infrastructure. For Swedes, this could mean more financial stability, a gradual return of job opportunities, and a sense of hope for the future. For Europe, a stronger Sweden signals resilience and the potential for regional growth, as Sweden's economy is closely linked to its neighbors. In this chapter, we'll break down the key signs of revival, from interest rate cuts to a bold new budget, and examine both the progress and the persistent challenges that remain. We'll also look at how Swedish innovation and adaptability are shaping the recovery. Let's piece together what's next for Sweden's economy as it heads into 2026, and explore what lessons can be learned from its journey through uncertainty toward renewed growth. On November 12, 2025, Finance Minister Elisabeth Svantesson addressed the nation with a message that balanced hope and realism. After months of economic uncertainty and somber forecasts, her words marked a subtle but important shift in tone. Standing before reporters at an outdoor press conference, she acknowledged the challenges Sweden has faced, but also pointed to signs that the worst may be behind us. She described a light at the end of the tunnel, a phrase that resonated with many Swedes who have endured a long period of economic restraint. This optimism, she explained, is not just wishful thinking, it's grounded in real data. For the first time in months, consumer spending is on the rise, suggesting that people are beginning to feel more secure about their finances. Households, once wary of high prices and rising interest rates, are starting to open their wallets again. This renewed willingness to spend is a critical sign of returning confidence, and it's being seen not just in the cities, but in towns and rural communities across the country. Positive sentiment is spreading through both industry and households, hinting at a broader psychological shift. Factories are reporting steadier orders, and local businesses are seeing more customers. The mood, while still cautious, is undeniably brighter than it was just a few months ago. The government's message is clear. There are reasons to be optimistic, but caution remains essential. Policymakers are urging Swedes not to let their guard down, reminding everyone that the recovery is still fragile and could be derailed by global events or unexpected setbacks. Svantesson's careful language acknowledges lingering risks. Sweden is still in the tunnel, not yet in full daylight. Inflation, while easing, remains a concern, and international markets are unpredictable. The government is watching these developments closely, ready to act if needed. The path to a stable recovery will require vigilance, smart policy decisions, and continued cooperation between government, businesses, and citizens. It's a collective effort, and everyone has a role to play in ensuring that progress continues. Still, the government's tone has changed, and that alone is a powerful signal. After a long period of uncertainty, even cautious optimism can inspire hope and motivate people to look forward. Sweden's economic outlook is improving, but the journey isn't over. The coming months will be crucial, and the nation will be watching closely as the story of recovery continues to unfold. The Riksbank's 8 interest rate cuts since spring 2024 have been pivotal in Sweden's recovery story. These cuts made borrowing cheaper, directly easing the burden on households, especially those with mortgages, and freeing up cash for spending. Businesses, too, benefited. Lower rates made it easier to invest, hire, and expand. The result? A gradual uptick in consumer spending and business activity, finally overcoming months of economic anxiety. But the effects weren't immediate. Households remained cautious well into 2025, highlighting the lag in monetary policy. Now, the cumulative impact is clear: confidence is returning, and the recovery is gaining traction. The Riksbank's actions laid the groundwork for this turnaround. As spending rises, the economy's engine is starting to hum again. Sweden's monetary policy has shifted from crisis response to supporting a sustainable rebound. In early November 2025, the Riksbank held its key rate at 1.75% and declared the end of its easing cycle. This marks a pivotal shift: no more emergency stimulus, but no rush to raise rates either. The central bank is signaling confidence in the recovery while staying alert to inflation risks. Analysts expect the next move to be a rate hike, but not before 2027, giving the economy time to solidify. This pause allows the government's fiscal measures to take center stage. The Riksbank's steady hand provides a stable backdrop for the next phase of recovery. Coordination between monetary and fiscal policy is now crucial. Sweden's economic management is entering a new, more balanced phase. With the central bank stepping back from its previous role as the main driver of economic support, all eyes are now on the Swedish government to take the lead. The Riksbank's recent signals of a more cautious approach have paved the way for a bold fiscal response. In response, the Swedish government is rolling out its most expansive budget since the pandemic, marking a significant shift in economic strategy. This budget is not just larger in size, but also broader in scope, aiming to address both immediate and long-term challenges. The primary goal is to boost household spending and accelerate growth, giving Swedish families and businesses the confidence to invest, spend, and plan for the future. By focusing on everyday people, the government hopes to ensure the recovery takes hold across all segments of society, not just in the financial markets or among large corporations. The timing of this budget is strategic, coming just as the economy shows signs of picking up momentum after a challenging period of stagnation and uncertainty. And with a high-stakes election looming in September 2026, the government is under pressure to deliver results that resonate with voters and restore public trust in its economic stewardship. The budget's core measures focus on putting more money in Swedes' pockets through targeted tax cuts, increased welfare payments, and new cost-of-living subsidies designed to help families cope with rising prices. By encouraging people to spend more and supporting small businesses, the government hopes to spark a new wave of job creation and economic activity, especially in sectors hit hardest by recent downturns. This approach is designed to counter the consumer caution and hesitancy that dominated last year, when many Swedes cut back on spending amid economic uncertainty. Of course, it's a calculated risk. Injecting this much stimulus into the economy could reignite inflationary pressures, which have only recently begun to ease. But the government believes there's enough slack in the economy to absorb the extra spending without causing prices to spiral out of control. Finance Minister Svantesson has expressed confidence that the plan is balanced and won't overheat the economy, emphasizing careful monitoring and flexibility to adjust if needed. Ultimately, the budget's success will be measured by its ability to fuel growth, create jobs, and support families, without undoing the hard-won progress on inflation and financial stability. Sweden is betting big on fiscal policy to lock in its recovery, hoping that bold action today will secure a more prosperous tomorrow for all its citizens. The numbers tell the real story. Sweden's GDP grew 1.1% in Q3 2025, beating expectations and confirming the recovery. This growth, driven by easing inflation and rising real wages, validates recent policy moves. The government now forecasts a robust 3.1% GDP increase for 2026, a bold target that would put Sweden among Europe's top performers. Strong GDP is just one piece. Labor market and retail data also point to building momentum. Positive sentiment in industry and households suggests the upswing will continue. The recovery is real, but sustaining it will require continued confidence and smart policy. Sweden's economic engine is revving up for a strong 2026. Strong growth is welcome, but inflation remains a stubborn challenge. October's headline inflation was 3.1%, down from previous highs, but still above the Riksbank's 2% target. Core inflation, at 2.8%, shows price pressures are broad-based, not just a blip. The government's big budget risks fueling demand and pushing prices higher. If inflation accelerates, the Riksbank may be forced to hike rates sooner, threatening the recovery. The government insists there's enough slack to prevent overheating, betting stimulus will boost output, not just prices. It's a high-stakes gamble. Can Sweden grow without reigniting inflation? The answer will shape policy and the economy in 2026. All eyes are on the monthly inflation reports to see if this balance holds. Not all sectors are sharing in the recovery. Sweden's house-building industry remains in the doldrums. High material costs and past rate hikes have stalled new construction, dampening demand and confidence. Construction is a major employer. Its struggles ripple through the broader economy. Rate cuts have eased mortgage pain, but haven't revived new building. Developers remain cautious. The sector's weakness is a stark reminder. Sweden's recovery is uneven and fragile. Addressing housing's challenges may require targeted support or reforms. For a truly broad-based recovery, all sectors, including construction, must find their footing. As 2025 ends, Sweden stands at a turning point. Recovery is underway, but challenges remain. The government's ambitious 3.1% growth target and expansive budget set the stage for 2026. The main test: sustaining momentum without reigniting inflation. The Riksbank is on hold, leaving fiscal policy in the spotlight. Persistent housing sector woes and other risks demand close attention and nimble responses. A successful recovery must lift all sectors and benefit all Swedes. With an election on the horizon, economic debates will intensify. If policymakers strike the right balance, 2026 could mark Sweden's full economic revival.